Since a good number of years ago, now Tesla Incorporated has been a captivating stock for investors, and it shows no indications of losing its fascination at this time. Elon Musk's electric vehicle company has been at the vanguard of innovation in the automotive sector on a constant basis, and as a result, its stock price has experienced phenomenal growth over the past decade. In this video, we will investigate how much will 100 shares of Tesla be worth in 2030. 3 estimates of future prices. In order to provide an answer to this question, we will investigate 3 distinct projections regarding the price of Tesla stock in the year 2030. Remember that these are not my own projections, but rather a collection of estimates from a variety of different sources. Bear market, $2,500 per share. The bear case prognosis for Tesla in 2030 of $2,500 per share is a relatively modest estimate. ARK Invest, a well-respected investment firm that is well known for its optimistic view of Tesla, has provided this estimate. They originally projected a bullish aim of $2,500 for the year 2027, but we have taken that number and stretched it to the year 2030. In order to achieve this price, Tesla would need to keep its vehicle sales at the same level while also making gradual improvements in the effectiveness of its production. Additionally, they might start the development of their robotaxi fleets on a more modest scale. In addition, Tesla's energy industry would continue its rapid expansion, and an increasing number of businesses would utilize the company's supercharging network. Expected case, $8,000 per share. The forecasted price of $8,000 per share for Tesla in 2030 is the result of taking the average of a number of different forecasts. In this hypothetical situation, Tesla would have been successful in achieving its target of selling 20 million vehicles, despite the fact that the date may have been somewhat pushed back to 2031 or later. Nevertheless, investors would see Tesla making significant headway toward this goal, which would improve investor confidence. The profit margins for Tesla will continue to expand, not only in the production of vehicles, but also across the company's whole range of business activities. There would be a significant demand for the Cybertruck, and a greater number of vehicles would make use of Tesla's charging network. In addition, a more reasonably priced model, such as the anticipated $25,000 hatchback, would be offered. The technology known as full self-driving would have been fully achieved, and the number of robo-taxis in operation would have increased, but they would not have reached full scale just yet. Bull case, $22,000 per share. The bullish price estimate of $22,000 per share in 2030 may seem implausibly high, but it is actually not as far-fetched as it seems to be at first glance. This forecast takes into account the possibility that Tesla will conduct stock splits in order to reach this price, which means that the actual quoted share price may not appear to be as high as expected. For Tesla to be able to sell its vehicles at this price, the company would need to have an extensive and fully functional fleet of robot taxis, license its full self-driving technology, and significantly expand its energy business. Both within and outside of Tesla's facilities, the TeslaBot, which is a labor-intensive tasks-designed robot, would be a substantial contributor to revenue. It is necessary to be aware of the fact that the occurrence of such a scenario is dependent on a number of precipitating factors. Price predictions in perspective. Let us put these price estimates into perspective by thinking about the possible growth in value, expressed as a percentage that 100 shares of Tesla could experience between the present day and the year 2030. In this scenario, the value would increase by an astounding 875.6%, which would translate to a price of $2,500 per share. In order to accomplish this goal, Tesla would need to keep their sales at a high level, increase their energy sector, and continue to work on their robotaxi project. Expected case, $8,000 per share. The expected case scenario entails Tesla's stock price reaching $8,000 per share by 2030, representing an impressive 22% increase in the value of 100 shares. To achieve this significant growth, several key factors must come into play. Meeting ambitious vehicle sales targets. Tesla has set an ambitious goal to sell 20 million vehicles by 2030. In this scenario, even if they don't reach this target precisely but demonstrate a clear path toward it, investor confidence can be maintained. Consistently strong vehicle sales are vital. Margin improvement across all business segments. Tesla would need to enhance profit margins not only in its vehicle manufacturing, but also in other areas of its business, such as energy solutions and charging infrastructure, Achieving this requires cost-cutting measures, operational efficiency, and strategies to boost profitability. Advancements in full self-driving technology. The realization of full self-driving technology is crucial. Widespread adoption among Tesla vehicle owners and the introduction of subscription-based models could contribute to recurring revenue. The successful implementation of FSD could be a game-changer for Tesla's financial performance. Progress with the robotaxi fleet. Although the robotaxi fleet may not reach full-scale deployment by 2030, substantial progress must be made. The fleet should be operational and make a significant contribution to Tesla's revenue. Overcoming regulatory challenges and achieving milestones in autonomous driving technology are pivotal to this scenario. In the most optimistic scenario, where Tesla's share price holds steady at $22,000 per share in 2030, it would result in an extraordinary 84.85% increase in the value of 100 shares. However, achieving such a remarkable valuation demands a comprehensive success story for Tesla across various fronts. Firstly, Tesla would need to make significant strides in establishing a substantial fleet of autonomous robotaxis. These self-driving vehicles would need to be operational and potentially contribute significantly to the company's revenue by 2030. The challenges here include regulatory approvals, technological advancements, and the ability to overcome hurdles in autonomous driving technology. Secondly, global adoption of Tesla bots would be a key driver. Beyond vehicles, Tesla's ambitious foray into robotics with Tesla bots would need to garner global adoption. These robots would have to find applications not only in industrial settings, but also potentially in households, offering unique labor solutions that drive revenue. The concept of Tesla bots revolutionizing labor and industry is promising but depends on successful development and widespread acceptance. It is of the utmost importance to stress that these forecasts are based on a variety of assumptions and conditions, all of which may or may not come to pass. The stock market is notorious for its inherent unpredictability, and Tesla's growth trajectory has a history of both quick ascents and dramatic descents in its price during the course of its existence. Historical data. Let us take a look at Tesla's annual returns over the previous several years to acquire some perspective on the company's prior performance. 2014, 48.42%. 2015, 7.01%. 2016, 1.99%. 2017, 45.68%. 2018, 6.98%. 2019, 25.71%. 2020, 743.4%. 2021, 67.1%. 2022, 65.18%. These data are illustrative of the extraordinary volatility that has been associated with Tesla's stock. There have been years with spectacular profits, but there have also been years with considerable losses. When contemplating an investment in Tesla or any other high-growth stock, as well as any other stock for that matter, it is essential to have both a long-term view and a diversified investment plan. In conclusion, the possible value of 100 shares of Tesla in the year 2030 is a matter of conjecture and is dependent on a wide range of conditions. These considerations include Tesla's capacity to achieve aggressive sales targets, expand its product lines, enhance profitability, and successfully manage regulatory difficulties. Bear, anticipated, and bull instances give a spectrum of possibilities, from extremely pessimistic to cautiously hopeful, and they are the focus of this discussion. Investors ought to view such forecasts with extreme caution, bearing in mind that the stock market is fraught with inherent uncertainty and is susceptible to a wide variety of outside influences. If you want to reach your long-term financial goals, it is absolutely necessary to carry out extensive study, determine your level of tolerance for risk, and diversify your investments. Keep in mind that even if Tesla has demonstrated great growth in the past, the company's previous success is not necessarily indicative of the company's future results. To be able to make educated decisions on investments, one needs to have a comprehensive grasp of the firm, the trends in the industry, and the economic conditions, in addition to the desire to adapt to changing conditions in the market. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.